Hey guys, welcome back to CryptoAl Predictor, your premier source for high-level AI analysis and the most disruptive trends in the digital asset space. Today, we are breaking down a project that is solving a trillion-unit problem by acting as the credit bridge between traditional finance and the decentralized world. Imagine a platform that allows institutional giants, the kind that manage billions, to access liquidity directly from the blockchain without needing to over-collateralize. Stick around until the very end, because our AI models have just processed the latest 2026 data on the PayFi expansion and the surge in institutional credit demand, and we've identified an explosive price target for this coin during this bull run. Make sure to hit that subscribe button to support the channel and stay updated on the future of institutional DeFi. Disclaimer: this video is for educational and entertainment purposes only. I am not a financial advisor. Always do your own research before making any decisions in the crypto market. The evolution of institutional lending in 2026. We've moved past the era where DeFi was only for Degans. We are now in the age of hybrid finance, where the $120 trillion traditional capital market is finally starting to flow on-chain. But for this to happen, institutions need credit. They don't want to lock up 150% of their assets just to take a loan. They want the same unsecured credit systems they use in the real world. This is exactly where Clearpool dominates. As the first decentralized marketplace for institutional unsecured capital, Clearpool has built the infrastructure that allows vetted, high-profile institutions to launch their own liquidity pools. In early 2026, the data shows that Clearpool isn't just a lending app anymore. It has become the tokenization engine for the on-chain credit economy. What is Clearpool? The credit protocol for Giants Clearpool is a decentralized capital markets ecosystem where institutional borrowers can access unsecured loans directly from the DeFi ecosystem. Key pillars of the ecosystem in 2026: single borrower liquidity pools. On Clearpool, institutions like Jane Street and Wintermute don't just borrow from a general pool. They launch their own specific pools where lenders can see exactly who they are lending to and what the borrower's real-time credit score is. Dynamic interest rates. The interest rates are driven by supply and demand. As an institution utilizes more of its pool, the interest rate rises, rewarding lenders for the increased risk and ensuring the pool remains liquid. Clearpool Prime. This is the strictly regulated, KYC-compliant arm of the protocol. In 2026, Prime has become the go-to destination for fintechs and neobanks looking to integrate tokenized yield into their own consumer apps. PayFi integration. A massive breakthrough this year is Clearpool's move into PayFi, providing the credit layer for stablecoin payment settlements. This addresses the liquidity gap between instant crypto payments and slow fiat processing. 2026 breakthroughs. Reaching $1 billion in originations. What has our AI models so bullish on Clearpool right now are the massive milestones the protocol has reached in the first quarter of 2026. Institutional expansion. Clearpool has officially surpassed 900 million units in total loans originated, with the global private credit market reaching $35 billion on-chain this year. Clearpool is capturing a massive share of the growth. Credit Vaults 2.0. The launch of Credit Vaults 2.0 with OvalFi has unlocked cross-border liquidity for payment financing. This allows companies to use Clearpool for real-world business operations, not just crypto trading. Multi-chain dominance. Originally an Ethereum and Polygon project, Clearpool is now a truly multi-chain infrastructure, powering credit layers on Base, Mantle, and even building an RWA layer for Bitcoin. Strategic partnerships. Collaborations with licensed custodians like Hex Trust mean that institutions can now hold their tokenized credit positions with the same level of security as their traditional bonds. The CPOOL token. The governance of global credit, the CPOOL token, is the utility and governance heart of the network. In 2026, its role is more critical than ever. Borrower staking. To launch a liquidity pool, an institution must stake a significant amount of CPOOL. This acts as a skin in the game mechanism and removes tokens from the circulating supply. Oracle rewards. Clearpool oracles, who secure the interest rate mechanism and vote on parameters, must stake CPOOL to earn their rewards. LP incentives. Lenders who provide liquidity to pools receive their interest in USDC, but they also earn additional yield boosters in CPOOL tokens. Buyback program. A portion of the protocol's revenue is now being used to buy CPOL on the open market to perpetually sustain the reward pools, creating a sustainable economic loop. With a circulating supply of 930 million out of a total 1 billion tokens, the unlock pressure of previous years is effectively over. Clearpool is now a supply-verified asset. The AI prediction, targeting 0.25 US now. Let's look at the data our AI models have been crunching. We've analyzed the 63% increase in daily trading volume this week and the protocol's resilience during the recent market resets. Our models look at the RWA growth curve. In 2026, the market is rewarding projects that have real, revenue-generating utility. As Clearpool continues to scale its PayFi and Prime platforms to meet the $16 trillion RWA opportunity, our AI sees a massive valuation gap closing. The AI prediction, based on the current institutional loan growth and the projected liquidity from the new PayFi settlement vaults, our AI predicts that Clearpool could reach a target of 0.25 US during this bull run. Why 0.25 US is a high probability goal to reach 0.25 US. CPOL would be reclaiming a market capitalization that reflects its status as a top-tier institutional infrastructure provider. Considering that the project has successfully navigated the regulatory shifts of 2025 and is now a leader in the fastest-growing RWA vertical, a 0.25 unit price is considered a high-conviction target by our models. At this price point, Clearpool would be valued as the primary credit rail of the on-chain economy, a target that reflects its dominance in bridging the gap between TradFi and DeFi. Final thoughts. The future of finance is transparent. Clearpool is proving that credit doesn't have to be a black box. By moving institutional lending onto the blockchain, they are creating a more transparent, efficient, and accessible financial system for everyone. Keep a close eye on the PayFi adoption metrics and the monthly loan origination reports throughout 2026. The shift toward tokenized credit is here, and Clearpool is holding the keys. Thank you for tuning into CryptoAl Predictor. We appreciate your support as we continue to track the most advanced RWA and credit protocols in the space.